But right now we want to look at the diversified miner, African Rainbow Minerals, ARM or ARM. It's increased its full year headline earnings per share by 2% to 16 Rand 15 cents. Revenue is up 18% to 18.14 million Rand due to increased sales volumes. So Mike Schmidt, CEO of ARM, joins us from the JSE to unpack the numbers. Mike, in an environment where miners are under pressure, you don't look as if you're under pressure. Certainly some big volume increases there. How do they relate to the financial numbers?
Dave, good morning to you. I think we are pleased with our results. Our strategy has been one of internal growth and growth per se, and it's come out very, very strong in these results. So notwithstanding the fact that commodity prices and huge volatility in the world, we have managed to offset that by our increased volume growth. So we're very, very pleased with that. Added to that, Dave, we've ramped up a number of projects. 3 of them are busy continuing to ramp up, and by the end of this year will be in steady state. That certainly will bode well, even in the conditions of falling commodity prices.
Of course,
we're pretty pleased with the outcome. Thanks, Dave.
Of course, Mike, you've highlighted that this is in a context of depressed commodity prices. Just how much more of a challenge is this going to be, maintaining the kind of growth that you're showing off right now, where you've got lower prices to contend with, because one would assume that it's going to become increasingly difficult to keep sales volumes high when you're looking at an economic growth slowdown.
Alishia, good morning to you. And yes, I think that is an important consideration. But as I just alluded to, we continually to ramp up our operations. We see that we anticipate that volumes will continue to grow. We speak about our iron ore. We continue to ramp up there. Our Nkomati is doing pretty well in terms of its ramp up. The GGV coal operations are now at steady state, and the transition from our PCB operations from underground to open cast will bode well, not only in volumes, but all of them will improve our efficiencies and curtail costs, Alishia.
Mike, we've got Brandon Sachs, who's a trader at Avial Research in the studio. He's got a question for you, Brandon.
Mike, just 2 questions. Firstly, I know Patrice in the interim said that he was quite excited about the huge infrastructure spend that government will be rolling out over the next sort of 6 to 12 months. I was just wondering, how's that sort of going? You're talking about these growth projects. What's sort of going there? Is everything going according to plan? Are you happy with how government's, where they're spending?
Brandon, I think what's very pleasing is that Transnet has been supported by government. Their recent announcement of the 300 billion capital expenditure, predominantly in rail and infrastructure and port over a 7-year period, suits and bodes extremely well for ARM, which would allow us to further grow our iron, manganese and coal interests, and organically we can do substantially better. And Brandon, we're well positioned in terms of feasibility studies to take the opportunity and go with government. Thanks, Brandon.
Just a second one then. We saw Bulletin come out and say they were going to, curtailment on their capex, especially on the Olympic Dam, which is quite a big project for them. I think it's going to work out well for Bulletin. I think it's probably what they needed. For you guys, same sort of boat. Any capex curtailments?
Brandon, I think it's prudent to say that we have always been very, very sensitive and prudent with our capital expenditure. We want to continue grow, but we always balance that by funding and funding requirements. I think, as I've alluded to earlier, 3 of our 4 projects are well in execution, and the timing of the Transnet announcement, we believe we are ideally positioned to continue with our growth projects, albeit we are very, very prudent and careful with our capital expenditure.
You've always had, Mike, a very conservative approach to cash. The company is lowly geared. We're looking right now at the company sitting with on balance sheet net cash of 2.3 billion rand. Is that what's afforded you to be in a comfortable enough position to declare what looks like a very healthy dividend, that increasing to 475 cents this morning?
Alishia, we consider our dividend payout at the end of the year in consultation with our board. We take a number of considerations, a number of aspects into consideration. Firstly, we look at our earnings, we look at our cash position, and we look at our balance sheet. We also look at earnings into the future. We remain optimistic and confident, and on the back of growing volumes, we believe that this dividend is acceptable, and we hope to continue paying dividends into the future.
Well, certainly that's something investors will be pleased to hear this morning. Mike, thanks so much for your time. We're going to have to leave the conversation there. Mike Schmidt, CEO of ARM.